Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and what we're going to talk about tonight is the big pop-up higher today in the equity markets. Yes, it was Memorial Day. The stock market was closed, but the futures markets were not closed. We're going to talk about the whys behind that rally. It was a pretty sizable one. And in fact, this is just a continuation of this morning's price action. I believe the futures market closed at 1 p.m. today. I could be wrong about that, but this is just a continuation of the price action that we saw early on in the day. We're going to talk about the EU deal, meaning the punt by the Trump administration to give them more time to cut a deal, even after last week's statement by the administration that he did not like the way they were negotiating, casting some doubt on a deal and putting pressure on the equity markets. That deal has apparently lifted the equity markets, or I should say, not a deal, the pause or the kicking the can down the road on those tariffs has allowed the equity markets to have a relief rally. We're also going to talk in greater detail about the big, beautiful tax bill. Is it beautiful? And will it really help anyone? And we'll talk about, of course, our chart requests. And what else? What else? Some of the headline news. We'll talk about valuations. We'll talk about earnings. We're going to talk about economic data. A lot to go over. Let's get to it. Okay, so the NQ, this is the futures version of the NASDAQ 100. It's so crazy. I only have 9 people on right now. This time last week, we had, I don't know, about 300. So it's a slow day. I guess because of the holiday, now 12. So we closed out the regular hour, the abbreviated session today up on the NQ at about, let's call it 1.5%, maybe 1.45. We're giving back a little bit here. Not much. It's still a strong up day. Of course, there's no volume. So we need to see during the regular hours session tomorrow whether or not this round of buying is going to be met with selling, which is what we saw all last week. Let's take a pause and say hello to folks. Corey, welcome. Frankly, good evening, Bob and team. Good evening to you. Hope everyone had a meaningful and enjoyable Memorial Day. Yes, and thank you for that. And I see that you're continuing with it. Let's take a moment to remember and honor those who gave everything for our freedom. I'm glad you said that. I'm glad you brought this up because I would have been ashamed if I did not remember it. And thank you. Yes, God bless to all of our veterans who have fallen, who are still alive. God bless them. And thank you for all that they have done for this country. So thanks, Franklin. Appreciate that. Seymour Rivers, audio. Thank you very much for that. Appreciate that. Mr. Sean, welcome, sir. George, good evening, everyone. Thanks, Franklin. Yes, sir. Tim, welcome. Good evening, Bob. Thanks to everyone who has served. Yes, absolutely. Absolutely. Oh, is it, that volcano was blowing up again, huh? Didn't that blow up like 20 years ago? Something like that? Seems to ring a bell. Okay, so let's get rid of that. Okay, let's move on. Let's take a look at the E-minis. E-minis are up 1.16%, giving back a fraction of their gains on the day. RTY, which is the small caps, they probably did well today. Not as well as I would have thought. They were up over a percentage point. The reason why I thought that they would have done better is because of the yield, 10-year yield, pulling in a bit. Mid caps are up 0.98%. Let's take a look at the yield, 10-year yield, and that came in today. Here's a 30-minute view. Lots of pressure on the 10-year yield all day today. So what this tells me is that the big, beautiful deal, that's pretty much baked into the cake. That's my hunch here. And that, yes, the reprieve on the tariffs on the EU, no doubt that is going to have an impact on our bond market because, frankly, the markets, for right or for wrong, we're losing confidence in the United States bond market with the threat of tariffs. But let's face it, these tariffs, and I've said this from day one, they're not meant to be tariffs. They're meant to be a stick, like Teddy Roosevelt carried that big stick, and he dragged everybody to the negotiation table. The question is, do they delay? Do they form alliances before that 90-day period where they can push the United States off? That's the big question. And I've warned that there are going to be milestones, even with the EU. If you think that there isn't a milestone out there that the EU must meet before July the 9th, which is when the tariffs would get implemented, you're wrong. He has to. He has to have that tripwire in there, because if he waits until, I repeat this over and over again, but it's worth repeating, if he waits the entire 90 days, what happens then? What happens then? He reapplies all those tariffs on the China and the EU. Then it's going to take another 30, 60 days, maybe 90 days for the teeth to kick in on those tariffs. Guess where we're at then? Midterm elections. You can't have the bond market and the stock market collapsing into the midterm elections. Everybody knows it. And I think that's why they're delaying. So Trump has got to be on his game here and call them out as soon as he sees that, you know what, you're delaying here and we got to hammer you. So I do not believe that the volatility has left the market yet. There's a lot of reasons why to believe that volatility will be back with a what do you call them? A truth on Truth Social, a tweet, whatever. Because last week was the EU's turn. It only makes sense that this week it's going to be China's turn for them to get knocked over the head a little bit in terms of headline risk. So let's be very, very diligent. Let's be very, very careful with our position sizing and being on margin, because this is a long way from being over. Now, let's take a look at the dollar. The dollar is down at current and looking pretty weak. It was lethargic all day long. It was active in the pre-market, but lethargic during the regular session. But, of course, on thin volume. Let's check in Bitcoin. Bitcoin moving up nearly 0.75%, just off of all-time highs. Let's go to Euro Yen. They changed this up here. What did they? Here it is. Euro had a really good week last week. Let's go to the weekly chart. This is a continuation breakout pattern. Doesn't mean that we can't pull back and retest support here on the euro, but longer term, this is pretty bearish for the US dollar. Let's check in with the yen. These used to be right next to each other. They put all these other pairs currencies here. What do I care about euro, Czech koruna? Here's the yen. Weekly chart. Threatening a potential move higher. This is a continuation breakout pattern. Let's check in with energy, NG. That's down 1.5% on the day. Crude oil, light sweet crude oil. This is a weekly chart here. And what I'm noticing here is that you have a very, let's get rid of all these lines. Clear drawing set. All right, let's do this. Right now we're threatening a breakdown on crude, but man, I'll tell you, if we rally up and through 63.50, around there, 63.22, CL, light sweet crude, would look very, very bullish. After this, and this is what impresses me the most, we've really stopped going down here ever since April, the week of April the 7th. We have not put in a new weekly lower low below that mark of that week. You know, we backed and filled here, but I'll tell you, this looks like it could be getting ready to move up. What's the IV rank here? Only 18%. I would be an options buyer on the breakout. I wouldn't sell them. Not enough premium there. But a breakout on light sweet crude would have me buying a call spread on light sweet crude for short covering rally. Let's check in with, go back to a 5-minute view. Let's check in with precious metals. Gold down, actually, down 0.66%. Did this trade today? It did trade today. It actually moved up in the pre-market. It was down. Oh, I see what happened here. Relative to the close on Friday, we drifted down in the post-market, and the pre-market session drifted back up a little bit to recover some real estate. But net, there was a lot of selling of gold over the weekend. Let's check in with silver. Silver is up at current 0.03%. Silver relative to gold is very, very cheap. Let's go to wheat prices. They're up. Let's go to a weekly view to see if a trade is to be had here. There is. We broke out last week on wheat, and I'd be looking for a retracement back down to support this week. Actually, this is this week's price action. I keep forgetting that it's Monday, and I even said Sunday Night Futures Live earlier. Wow. Oh, no, this is not this week's. This is last week's, 519. So still, we're looking for a retrace back down to support. So let me throw up an alert here. I need to fire my production staff. But how do you fire a production staff of none? I can't figure that one out, but I'm working on it. It'll help boost my ego. Retest, weekly support. Okay. Let's check in with corn prices. Ag seems to be coming back here a little bit. This could be a seasonality trade that's setting up. We broke out last week. Soybean, ooh. Soybeans looking really pretty here. Inverted head and shoulders setup. Let's get all these drawings off. Remove all. Where is the clear drawing set? Boom. All right. So here's your left shoulder. Here's your head. Here's your right shoulder. And here is your 45-degree neckline. I think soybeans are getting ready to break out. Nice base. They've really done nothing since December. Just consolidated sideways. Let's see. What else do we need to go over here? Talon, welcome. Happy Memorial Day. Let's see what else we want to go over. Gasoline prices. They're unfortunately up a little bit. I think we covered it all. Copper. This is a weekly chart looking really, really good here. This looks like it's a buy. All the way up to 540 on copper. Okay. That's pretty much it. Let's go to let's go to the forum. Folks, if you're not currently a member of our forum, it's free, no credit card required. Head on over. And this is where we keep our chart requests for this show. I need to fix this. Monday. Damn producer. Okay. So we have George with KSC. Where's my notebook? QSI. Franklin, CCJ. And what do we have here? Let's do a refresh. VST for Sean. Mark Hims. Great company. Talon, Soundhound. Okay. Do we have somebody else? Tim, PLTR. All right, let's get to it. All right, let's talk economic data that's coming out this week. Nothing, of course, today. Tomorrow, we get Neil Kashkari coming out. We get durable goods out tomorrow. That's an important number. Very, very important number. Those are the Those are the production of orders, I should say, of washing machines, dryers, durable goods, large ticket items that are meant to last several years. Consumer confidence. Wednesday, Neil Kashkari again. We get the Fed minutes this week. Thursday, initial jobless claims. We get that every week. GDP first revision for Q1. More Fed heads. I don't know what the hell they have to say, but okay. I wonder if they get paid fees. Do you think they get paid fees for those speeches? Friday, consumer spending, PCE, that's the Fed's favorite inflation metric. Advanced U.S. trade balance in goods. That might be interesting for a change given the tariff news. Consumer sentiment, the final read for May. And Chicago Business Barometer, PMI. And that has been in contraction. Any read below 50 is a sign of contraction. So that's the economic data. Not a lot of it, but that which is being reported is significant. In terms of earnings coming out this week, I know somebody requested, I think it was Talon, requested PLTR. They're reporting after the bell on Monday. We get Ford. Rarely is Monday a busy day for earnings, but I'll tell you, this is one of those rare cases. Palantir, Ford, Diamondback Energy, HIMS. After the, I'm sorry, let me skip to Tuesday. Race, Ferrari, before the bell on Tuesday. Marriott, Datadog. After the bell on Tuesday, AMD, Suncor, Devon, Supermicro. Wednesday, before the bell, Uber, Walt Disney, Rockwell Automation. After the bell, we get ARM, AppLovin. That chart's it was looking good. Now it's looking a little bit iffy, perhaps a little bit of trepidation in advance of earnings. DoorDash reports. They're at my house every day. I don't eat anything from DoorDash, but they're at my door every day. Somebody from my house is ordering DoorDash constantly. Occidental, Carvana, Zillow. Before the bell on Thursday, Toyota, Shopify, ConocoPhillips, Warner Brothers, Molson Coors. After the bell, McKesson, Coinbase, HubSpot, The Trade Desk, Friday, Enbridge, and that's another energy stock. And that's pretty much it. Busy earnings week. We're late in the quarter. I thought that NVIDIA would report this week. I guess not. Have they already reported? When does NVIDIA report? Skip it. I'll look at it on my own time. Okay, let's talk a little bit about valuations of the market. So we have a delay in tariffs. We have the big, beautiful bill, which we'll talk about more in a moment. So we got to ask ourselves, what has really changed here? And the answer is not much until that bill gets signed, meaning the big, beautiful tax bill. And we may get some boost to the economy in advance of the midterms, assuming that we get a deal with the Chinese and a deal with the EU. But at current, as it stands, we have the S&P 500 Schiller PE multiple, also known as the CAPE ratio, at 35.64. Hold on. I had the wrong week up. My damn producers. I can't take the blame for myself. Let's see. Thank you, sir. I have never seen this before, but okay. Let's go back to earnings. I just sent a text over to my imaginary producer, and he is on suspension. All right, tomorrow. We get nothing in terms of, I never used this one before. Wednesday, Dick's Sporting Goods, Macy's, NVIDIA. There we go. There's NVIDIA. I kind of figured they were reporting this week. Salesforce.com, CRM, HPQ reports, Best Buy reports. Lots of retail coming out this week. Foot Locker, Kohl's, Costco, Dell, Marvell Technology, Ulta, Gap, and on Friday, I guess none. Friday and Mondays are usually pretty quiet days for earnings, so no great shock there. Thank you for that, Mr. Tim. Appreciate that. Okay, so back to the Schiller PE multiple. Folks, we're still extremely expensive. And you may be saying, using the CAPE ratio, it's a trailing multiple. Why don't you use the forward multiple? Okay, I will. Let's go to the forward multiple. The forward multiple, 12-month PE multiple on the SPX is 21.1, which is above the 5-year of 19.9 and above the 10-year of 18.4. Not ridiculously overbought on a forward basis, but overbought nonetheless. Overvalued, I should say. Overvalued. Now, I want to talk about a few things that could be a dampener for the market. Now, I've been warning about a tax bill that comes out because in all probability, it's going to reduce the probability of the Federal Reserve cutting rates. And I've been focusing quite a bit on a September rate cut, which was in the mid-60s mid last week. Now we're at 58.6. It's close enough to say that September's a coin flip. We're now looking maybe at October as the month they're going to go and cut rates. December, they're still pretty optimistic about, but the Federal Reserve is not in our corner. I went over on Thursday with members the Fed's balance sheet, and it dropped nearly $100 billion last week. And that is that causes yields to rise. So they are clearly not in the camp of helping the president trying to get yields lower. And to be honest with you, they're right not to do it. So don't expect the Federal Reserve to come riding in on a white horse at any time soon, unless, of course, the jobs picture becomes a major issue. If you see a lot of layoffs, if you see something blow up, then the Federal Reserve will step in. Till then, don't expect them. This is the Federal Reserve is sidelined. They have nothing to do with this market right now. They have nothing that's causing them any pressure to cut rates, with the exception of the administration. Now, the price of credit default swaps. If anybody that's watched the movies about the 2008 financial crisis, was a Margin Call and a couple of other movies that are out there, CDSs, credit default swaps. This is insurance on derivatives. And they're beginning to rise yet again. Worries about the U.S. government being able to pay off their debt. We're at levels not seen since around, they were declining in 2023, but we're rising back up again. And you could see that the trend here, if you took your imaginary crayon out, you connected the dots at the lower end, connected the dots at the upper end, it's clear that we have a rising trend on the credit default swaps. So that's a concern out there. Add to that, I posted this, I may have gone over this last Sunday, but Japan's 40-year bond yield just ticked up to 3.48%, its highest level in 2 decades. I replied, goodbye yen carry trade. And this is a major key to what's been keeping, along with company buybacks, with keeping the stock market moving forward. That well is beginning to dry up and do so rapidly. Now let's talk a little bit about the big, beautiful bill. Is it really that beautiful? Let's talk about it. So what we have here is tax reform. Tax reform's 2017 tax cuts. They're going to be made permanent. No great shock there. Elimination of taxes on tips and overtime. That was a goal or a campaign promise. I'm really surprised that they're keeping it. And elimination of taxes on overtime. I got to tell you, why would you want to be a middle manager if you have overtime, which is no longer taxed? Think about it. So if you're an hourly worker, this tax bill is great for you. If you are working in a restaurant, it's great for you. If you are an Uber driver, it is great for you. This one impacted me very, very heavily back in when Trump had in his first term, did the tax cuts. My taxes went up because remember, I am under the umbrella of the alternative minimum tax. So I saw no tax cut. My taxes went up because I could no longer write off all of my property taxes, and at that time, the mortgage interest, could no longer write that all off. I was capped at $10,000. Do you know what it costs to live for taxes alone on Long Island? It's insane. Well above $10,000 in property taxes. So I took it on the chin with that tax cut. I didn't get one. I never saw that. $4,000 standard deduction for seniors age 65 and over, and allows for deductions on interest on car loans, U.S.-made vehicles. Okay, that's really a subsidy for the auto industry. The child tax credit increases the child tax credit to $2,500 through 2028. So that looks like it is temporary. That looks like a temporary, the way that's right. I'll need to do more research on that. Trump accounts establishes savings accounts offering $1,000 for educational housing expenses upon turning 18. Okay. You know, most 18-year-olds nowadays, they hardly work. So, if it applies towards the parent who's really paying the bills nowadays, when I was 18, I had 2 jobs. But 18-year-olds nowadays, a lot of them don't have jobs. It's the parent that foots the bill. So if the parent's able to write that off or get that tax benefit, great. Debt ceiling increase, no bueno. So this is what I hate being a doom and gloomer. I hate paying exorbitant taxes. I don't mind paying my fair share. I hate paying exorbitant taxes. Despise it, because the fraud and abuse, which all you hear are people complaining about Doge digging up and trying to do away with, not everyone obviously, but the loud minority is very upset with waste, fraud, and abuse being addressed in the government. So the fact that we are going to cut taxes and raise the national debt, I'm sorry. That does not work for me. You tell me you're going to cut taxes and cut government. If you're cutting government, you don't need a debt ceiling increase. You should live by the budget from last year if you're going to cut government spending. Maybe a 3% COLA, cost of living increase on top of it. Otherwise, this is just going to blow out our deficits. It's going to our debt is about to skyrocket. Now, this one here, this is like take from Peter to give to Paul, okay? So they're going to cut Medicaid restrictions. They're going to have SNAP reforms. I believe that has to do with, I'm not 100% on this, so forgive me. I believe it has to do with food stamps. Somebody want to validate that in the comments? That would be great. I could tell you I live in the People's Republic of New York. So they're never, ever going to cut this this from the poor here. They won't do it because their votes come from the people that receive these goods. Our lovely governor. So they're never going to cut this. So whatever I see saved on not having to pay out to the government on my tax cap, a portion of it's going to be taken back because they're going to raise my state taxes here to pay for all the pushback that's being pushed back onto the state. The state's going to have to absorb these cuts. Border wall security, okay. AI regulation moratorium. I'm good with any regulation on the state level with that. Eliminate subsidies, and even Elon Musk said this is no longer required. And frankly, I think that Elon Musk is saying that because it kind of suits him. Because if you had that subsidy and the Chinese were able to dump as many cars here in the United States as what they wanted, they would be all that much cheaper. And it would really hurt Tesla. This kind of keeps the Chinese companies at bay. Economic and social impacts, tax cuts for higher earners. The bill is projected to provide substantial tax breaks to the wealthiest Americans, potentially increasing wealth inequality. How's that working for us? Deficit increase. We know this. I'm not even going to read it. Healthcare coverage. This here, I don't have any problem with. I'm sorry. There are way too many people on the government teat. They got to get off. They got to get off. But I'm sure that I'm going to still have to pay a greater portion of that bill. All right, so they're going to pass this. So I asked, what about, this is ChatGPT, what about the AMT? Is there anything about the alternative minimum tax? This is just a chokehold on me. Whenever I ask my accountant, does this tax cut help me? No, AMT. I get slapped around like the unwanted stepchild that I am by the government because of the alternative minimum tax. So, is there anything about the AMT? I expected to hear no. I'm happy to see that, yeah, there's something going on here. Yes, the alternative minimum tax is addressed in Trump's big, beautiful bill as part of the broader tax reforms. The bill includes provisions that aim to eliminate the AMT for individuals and corporations. Here's the rub. The abolishment of the AMT. The bill proposes repealing the individual AMT, which has traditionally aimed to ensure that high-income earners pay at least a minimum level of taxes. Yes, in the late 60s, it was put in place to support Guns and Butters by Lyndon Baines Johnson, arguably one of our worst presidents ever. And at that time, it was applied to people that made, I believe the number was $150,000 or more, which was like making $1 million a year in that neighborhood. But the thing is, this is the nefarious thing that they did back then, is that they never indexed that $150,000 to inflation. So every year, that net gathered more and more taxpayers. And in the 1970s, when inflation ripped through the ceiling and wage growth went with it, so got bigger the AMT, all the people captured by it. Fast forward to most recently with all of our inflation, guess what? Wages grew. And guess what? More people are captured under this AMT. Now, the repeal is expected to benefit higher income individuals who would otherwise be affected by the AMT. The AMT, here's the rub. The AMT was again put in place to tax those who were given so many tax breaks, so they had to pay a minimum amount of tax. This bill is letting them off the hook. People that don't meet the threshold or whatever is going to be, how are they phrasing this? Higher income individuals. What does that mean? What does that mean? Is it $500,000 a year? Is it $150,000 a year? Is it $80,000 a year individual? I have no idea. The value of this bill all depends to me on what are the individual and married filing jointly, married filing individually limits or the thresholds to the AMT. They ought to wipe it out altogether, get rid of it, but they're not going to do it. They're going to let the richest 1% get off the hook for the AMT. That is wrong. And they're going to let people that were never supposed to be captured under this tax stay on the hook for the AMT. That is highway robbery. So I asked, what is considered a high earner? Now, this is ChatGPT. It doesn't know. It's really just a guess right now what that's going to be. So in the U.S., the median household income is approximately $75,000 as of 2023. A high earner would be typically one who earns significantly more, as defined by those earning 2 to 3 times the median or higher, which would be above $150,000. That was what was instituted back in the late 1960s. $150,000 threshold. So I'm not going to read all of this. You could see that the devil is in the details of this bill. And by virtue of the fact that they're really not going to cut government spending, I think that, yeah, sure. Short term, it's going to provide a stimulus. Longer term, all it's going to do is drive up our deficits all the more. Our interest on our debt is going to move up higher. Our credit ratings are probably going to get ratcheted down yet again. It's been 13 years since Standard & Poor's downgraded our debt from AAA. We're due. Are you saying market overbought? No, I'm not saying that. I think that I think that that you could see multiple expansion here due to this bill because of the short-term spending that you're going to see on the part of those that no longer have to pay taxes on their tips, on their overtime. That's going to free up a lot of money for those folks. Now, in terms of those that are not salaried workers, I don't know why you'd want to be a middle manager anymore. Why would you not want to work hourly and make overtime and have that be tax-free? You're going to have hourly employees making the same as salaried employees in certain circumstances. So there's a lot not to like about this bill, to be honest with you. There's a lot not to like about it. There's certain things that I do like, a lot not to like. I'll be more optimistic once we get more detail around the alternative minimum tax. Not enough is being talked about, and you never hear about it in the press. Nobody ever wants to talk about it because it is theft, outright theft. Okay. Let's do some chart requests here. Oh, I want to talk a little bit about bonds for a moment, if I could. And by the way, we're using TrendSpider, one of our sponsors. I did a video today on how to use how I use their automated trend lines. I spent a lot of time on it. And if you watch, if you leave a comment, is it too long? I'm going to make more of these. I want to know if they're too long. What could I do better, to be honest with you? So I'll share the link in the chat area and leave a comment, please. I'll definitely get back to you with a response. So I want to talk a little bit about bonds. Now, what I just spoke about with the big, beautiful deal should be very, very bearish for U.S. debt. I think short term, the fact that you have the kicking the can down the road on the tariffs, that's going to allow for a rally in the TLT. And I'm going to talk a little bit more about why I think the TLT is going to rally. Now, longer term, I think that this bill and the continued deficit spending, $4 trillion, $4 trillion, unless you see here, okay, so let me, sometimes I think that people could read my mind, and obviously you can't. We can grow the deficit, but if we're not growing the GDP, we're doomed. GDP needs to grow with the amount of debt that we're taking on. And yes, it's going to stimulate the economy, but yes, it's going to stimulate interest rates. So the Federal Reserve can't do anything. Now, if GDP grows and it grows at 4-5%, then the deficit gets smaller relative to GDP. Right now, we have the deficit, which is like at 130% of GDP. That's unsustainable. But believe it or not, we've been there before, post-World War II. We had all the debt built up from World War II. We grew the GDP, we cut spending, and we grew our way out of it. So it's not as if we haven't done it before. The difference between now and then is that we eviscerated our industrial base. We don't build enough here anymore to export and sell to help grow that GDP. That's what President Trump is trying to do, and I understand that. But I wish we would be waiting for that growth to come back to the United States before we blow out our balance sheets and risk a credit default issue. That's what I worry about. So I'm not entirely doom and gloom. These GDP reports moving forward are going to be critical for where this market moves next. If you see GDP rise rapidly, 3.5%, 4% on annum, then you're going to see a stock market that's going to say, okay, we can grow into this multiple. Now we have room to move up higher. But if you see debts moving up, GDP stalling, that's a major problem for the equity markets. Now, TLT, let's talk about the chart here. And I'm warming up to it because we got the can kicked down the road today on tariffs, bullish for bonds. We know there's going to be a signing by the president of the bill. So what did yields do? They went down today. Bonds went up, bullish for TLT. Let's take a look at where we're at in terms of trend lines. Let's take this off for a moment. So on a weekly time frame, we are bouncing off of weekly support. And then when you overlay the monthly support and resistance levels on a weekly chart, we have resistance immediately above, but support immediately below. I'll tell you right now, if they wipe TLT out down to around 82.52 per share, I'm a buyer. Is it an investment? No. But I would be a buyer for a trade. That's TLT. First up, QSI. Quantum Psi Incorporated. This is a really, really pretty chart. This is gorgeous. Look at this descending wedge formation. Look at the value of the automated trend lines. Folks, use my link below on YouTube, above on Facebook and Twitter. Get a bare minimum 35% discount. TrendSpider may have a Memorial Day sale. You'll get a better deal than my discount code. Go check it out, but use my link. Help support the channel, please. So we were in a descending wedge formation here, weekly time frame. We broke out here the week of November 4, 2024. That failed. Then we got a subsequent breakout the week of November the 18th, short covering rally, retracement back. We retested weekly support, not one level, but two. Gorgeous. Gorgeous. And take note of where we found support, not at just weekly, but at monthly support. The monthly overlay is dotted in, well, dotted, dashed. And the weekly time frame, of which is the primary chart here, is in solid line. If we go to a daily chart, we keep the weekly on, you get the drift. All right, it's going to be week. Let's go to the daily chart. I'll show you. So weekly chart looking bullish. Daily chart, we have the solid lines on a daily time frame. Now on a weekly chart, do we not have? Let's get data off. It is off. Let's go to okay. So I just enhanced the automated trend lines, and you don't want to buy this stock right now because what we've done here, again, daily chart, weekly overlay with weekly resistance, we rallied right up and into daily and weekly resistance levels. We don't want to buy there. That's for suckers. We need a pullback on the shares. So where might there be support? Let's go to a 4-hour view. I like $1.56. That's where I think we're going on QSI. Perhaps we'll get a short squeeze higher. If we do, I'm not going to chase it. I would be a buyer at $1.56 per share. And in fact, I'm going to create an alert here. Touch, bounce. I got to do more research. I really like this chart on a longer term basis. Sometimes I get an alert that fires off, and I don't look at the weekly chart as I should. That's why I make a note to myself, look. Okay. So that's QSI. Next chart up, CCJ. A lot going on here. Let's get the weekly time. This is way too much going on. Let's take the overlay off. Let's get drawings off. Okay, better. I'm not buying it here. Again, we have way too much overhead supply up here. So every time we've hit these resistance levels, you can go all the way back to here, 2013, 2014, 2024, 2024, 2024. Here we are yet again. And ultimately, this gets resolved to the downside. There may be more upside to be had here on a short squeeze. I don't know what the short interest here is, but certainly they can pull it back, rally it through. But normally, that's a sign to get out, not to buy or initiate a new position. So just be careful. Resistance at 61.78. That's the primary resistance level. The next resistance level is 58.69. Daily view. Yeah, we broke out and above daily resistance. Again, the automated trend lines. If you're going to swing for the fences here, you're going to try to go to that weekly. Weekly resistance level above. Wait for a retracement back down to 58.27, give or take a dime, and then look for a reversal off of that retest and a continuation move up higher. I would use a trailing stop loss order, and I would definitely be out as we hit, let's call it 61.50. Right, get out right before that price targets hit, because that way you have liquidity you can get out in. VST, Vistra Corp. Let's go with a weekly view. Okay. So there's more upside here on a weekly view, probably up to $161. If it gets through there, we're coming up to around, let's bring this down lower. Let's be conservative. It's always better to be conservative. 173.50. It's had a heck of a run off the lows. Good breakout on Friday. Actually, not on Friday. It was a continuation move on Friday. We'd actually broken out on the 19th, failed to hold it, recaptured. So, yeah, again, it broke out in a continuation move up higher on Friday. How is our volume? Volume was meh. Was that right? On the week, it was not great. So you're running into some resistance here. Again, would I trade it? No, it's not at support. It's near a resistance. If you're long of it, I would use a trailing stop loss order. Let the market take you out. Clearly, it's in momentum right now, so it's in play. I would use a trailing stop loss order. Let the market take you out. HIMS. You are welcome, Franklin. Anytime, but got to fire that producer. Yeah, that's right. I need to see if I can get an intern. That's what I'm thinking about doing. You're welcome, Sean. Okay, HIMS, great company. My son owns this company. I never owned it. Rough week last week. It failed to hold the breakout. And this is what I always worry about. When we were taking a look at QSI, VST, those names, this is what I worry about. You get these screaming rallies up and into resistance, and then all of a sudden you poop out. I believe this is an earnings report. So I don't like the weekly chart. I'm not a buyer here. I think that I wouldn't call it a double top. I think that term is too loosely used. But what I would be looking for is to see whether or not $51 per share becomes a support level, because sometimes we need to create our own formations. And in this instance, we have now begun possibly, if we hold this week or last week's lows, if we hold the lows of 2 weeks ago, daily chart. If we hold last week's lows, I was right the first time, then perhaps we begin building a base. I think that's the best thing you could hope for right now on HIMS, is that we begin to build a base and then we begin to break out. The greater the consolidation, the greater the validation of the breakout. Would I sell here? No, it's a great company. Would I sell covered calls? If it's optionable, yeah, no doubt about it. So bullish on HIMS longer term, not bullish short term. I'm a holder and I'd be selling covered calls if I'm a long-term holder. I think this is a great stock to sell covered calls on. Soundhound. Excuse me. Okay, so Soundhound, weekly chart. Ugh. Let's get rid of all this. Start fresh. Okay, that's better. Let's bring up the Fibonacci's for a second. Yeah, we bounced off of the Fibonacci's. That's kind of in the rearview mirror. Trend lines in the rearview mirror. It's trying to find a zone at which it can consolidate. Here's the heat map. This is a tough one. I can't initiate a new trade here because we took out the prior week's lows. Volume was not huge, but it was respectable. It was about average. So sometimes we need to do things. You know what? Let me do this. Let me flip the switch here a bit. This is on enhanced. Let's go standard. Better. I would have drawn the trend line differently here. I would have gone this route. I'd rather go with the extreme moves. So I'm a buyer of the shares on a pullback to between, you show me a 7 handle down to 729. I'm a buyer of Soundhound. I think it's a great company. It's going to do great. But right now it's in no man's land. So I'm not a buyer at current. Daily chart. Maybe we're going to put in a higher low here. Another way to look at it is that we broke support. So it needs to consolidate, perhaps a little bit more of a retracement. I'm not a buyer of Soundhound right now. Great company, but I'd like to see it at lower prices. So my risk reward is a little bit more in my favor than where I would be buying it right now. Let's leave it off with PLTR. Let's get rid of the drawings. Okay, so PLTR inside week last week, very extended, great company. There's nothing really to help in terms of support. And when you take a look at it this way, I think my concern, well, let's redraw all this. My concern here is this, is that we've gone parabolic. How do you initiate a new trade there? So I would be a seller of the shares at these levels. Doesn't mean it's not going to move up higher tomorrow. Again, another trade where I'll be using a trailing stop loss order. Let the market take you out. But it could be stalling here a little bit. Volume was not very high last week, but it's come a long way off of its lows. So I would be careful with this one. Very, very extended. Here's the daily view. We're testing that lower band of support at current. If we break down below 119 and close there, it's going to go measurably lower. Could come all the way down here to around 123.50. So if it does, I want to know about it. and it may take some time. So I'm going to keep this active for about 40 days. And that's it, folks. Thank you, Sean. Sounds good. I'll see you tomorrow morning. Peace out. All right, folks. Thank you for being here. Everybody have a great Memorial Day. Don't forget about TrendSpider. Get my bare minimum 35% discount code. Use my link below on YouTube, above on Facebook and Twitter. And everybody have a profitable trading week. I'll talk to you soon. Be well.